Hey everyone, it's Jordan here from Diary of a Mortgage Broker. I'm interviewing Dan Tully in this episode. I'm doing a quick intro video slash voice recording because the episode is a little bit jumpy. We've had some tech difficulties. I had to stitch two parts together, um, but it was so worth it because the value and content that Dan provided was just so good. So I encourage you to bear with us. There's a couple of jumps in there, obviously, because we're switching between two takes. Um, but he talks about the real estate market and how real estate agents work to sell you a home and what that looks like in terms of bracket creep. Talks about how he's you know coming from emergency services into mortgage brokering and how he's been able to kind of be in both worlds and help people save money on a home by getting them lower interest rates and how that makes a difference with them rocking up to work. And that is really heartwarming. That is the main reason that this episode I've had to stitch together and show you because it's just so good. We will end up doing another episode later down the track, but we're all busy people. So without further ado, actually before I finish up, I am currently sharing my screen for Thin Blue Home Loans, the website. That's thinbluehomeloans.com.au for those that can't see this. This is a really nice website that Mark Noonan from 90 Degrees Digital made, and I encourage you to check it out. Check out his stuff. And yeah, really good bloke. Really, really good bloke. Dan Tully here. So without further ado, here is the episode, and thank you so much for checking it.
All right, we're live. Diary of a Mortgage Broker with Dan Tully from Thin Blue Home Loans. Dan, thanks for coming on, mate.
No, no worries, mate. No worries. How are you?
Very good, mate. It's we were just talking before we hit record about this original podcast meeting was supposed to be at 7 p.m. tonight, and trying to juggle calendars. And I'm thinking, who actually checks calendar appointments for nighttime? So I'm glad we pushed it forward, mate.
Oh, I'm sorry, mate. I'm sorry. As I said, I carry that the hard copy calendar. I've got to get digitized at some point in time. I'll have to hit you up for it.
Yeah, no, it's perfect. It's perfect. So Dan, mate, you've got such a story behind you, and I'm just excited to hear you talk. But tell us a bit about you and who you are. Who is Dan Tully and Dan Tully, the mortgage broker?
Oh, mate, that's a yeah, question without notice. Where to start, mate? The mortgage broking thing. So it's a I'm still in the emergency services, right? I run in emergency services, and I remember starting off very early on in the piece, and I was having a chat with a bloke one day, and he gets to talk to people about, mate, what did you do before joining, and tell me about yourself. And he told me that he was a mortgage broker and how it all worked. And I was like, oh, geez, that sounds really good. Now this conversation was like 20 years ago, and I sort of never forgot it. And then my brother started a mortgage broking business as well, probably I want to say 15 years ago. And so he helped me out with buying houses and things like that. And it sort of got to the point where I don't know about you, but I've always had a bit of a checklist in life. It's like I want to do this, I want to do that, I want to do something else. And as I don't know, maybe it's a good thing, maybe it's a bad thing, and I need to create a bigger list. But one of them, and probably the last thing on my list, or second last thing, sorry, on my list was to start a business for myself. And so yeah, probably about 10 years ago, I thought, oh, maybe I'll do the study for the mortgage broking thing and just see what happens. And I did the study, and it sort of sat there. And about 5 years ago, I went, you know what? I'd sort of forgotten about the idea of starting a business, and then I went, you know what? There's an opportunity here, and I can see being interested in where my money is going in terms of trying to pay off a home. Could I could see a lot of my colleagues that were sort of struggling and not really having a great idea as to where their funds were going. And I was like, "Man, I reckon there's probably an opportunity here to save these people a bit of coin. And if I'm saving them a bit of coin, then and they see the benefits. Then my theory was sort of, well, they'll be happier to come to work for me, if that makes sense, in the other job. Um,
Yeah, awesome.
and I'll tell you what, mate, it really works. So I guess, that's how the business started in terms of me as the mortgage broker. Um, yeah, man, I think, yeah, I don't know what to say. That's probably the crux of it, trying to help those people out, the people that I'm working with. And unfortunately, there's a lot of people. I was pretty much right in my assumption, and there was a lot of people that didn't know where their funds were going. People sort of set and forget their mortgages and bury their head in the sand. And I've managed to save a few people, some coin, and so the business has gone really well as a result. So now, 5 years down the track, here we are sitting on podcasts.
Wow, I love it. Man, you've touched on so many things there. It's really interesting to see your perspective on how that went, because a lot of people, I think, will get into a mortgage broking because it's a great business, a lot of opportunity, and obviously there's a great business to scale and all that sort of stuff. But I see where you've kind of, it's that helping mindset, and so that's just really, really cool. And you touched on, because saving people a bit of coin, they come to work happier. Like, that is awesome. There's nothing more empowering when you feel like you're on top of your finances, or that you're not you're ahead of it not getting controlled by your finances, if that makes sense.
Oh yeah, man, 100%. Like, it's funny, people, as I said, being in emergency services, people, and none of the emergency services nor the armed forces, I would suggest, have a great way of dealing with things like mental health. And your concern about finances is one of those things that goes towards, or contributes towards, I guess, a negative decline in mental health, because people worry about these things. But when they turn up to work, or they get out of the car and they turn up to work, and blokes are classic with this. It's just game face on, and yep, everything's rosy. And whether it be the finances or the family, or something else, um, you know, they could actually be, the black dog. They could actually be in a bit of decline, and the mental health might really be suffering, and you never know. Now, finances is only like it's a bit of a minor part of that. But if that's something that people are worrying about, and we can take care of them, or take care of that for them, and take some of the worry out of it for them, well, hey, we've had a win. And maybe when they do turn up with a bit of a smile, that's a genuine smile. They're not worried about stuff at the back.
That is cool. I love that. A genuine smile. And yeah, you're right. Like, financial pressures, debt, bad debt as well. Some of those things, especially if you're sinking, if you're underwater, there's not much more that's more stressful than that.
Oh yeah, yeah. And I mean, I can understand how. I can certainly understand how it happens. Especially within the armed forces and emergency services and those types of things. People come as, hey, day one, you're earning a good wage, and what young people do when they get a good wage, and they've just out of school, or just got a qualification, they start to earn money. Tradies are a classic example. They go out and buy like the Ford Ranger or something like that. They get themselves in, not Ford Ranger or any other type of four-wheel drive ute thing that they might not necessarily need. Not that that's a bad thing, but they get themselves in probably debt that they don't need. So, sorry, mate, that might be it. Being in emergency services, people, and none of the emergency services nor the armed forces, I would suggest, have a great way of dealing with things like mental health. And your concern about finances is one of those things that goes towards, or contributes towards, I guess, a negative decline in mental health, because people worry about these things. But when they turn up to work, or they get out of the car and they turn up to work, and blokes are classic with this. It's just game face on, and yep, everything's rosy. And whether it be the finances or the family, or something else, they could actually be, the black dog. They could actually be in a bit of decline, and the mental health might really be suffering, and you never know. Now, finances is only like it's a bit of a minor part of that. But if that's
Mm.
something that people are worrying about, and we can take care of them, or take care of that for them, and take some of the worry out of it for them, well, hey, we've had a win, and maybe when they do turn up with a bit of a smile, that's a genuine smile, and they're not worried about stuff at the back.
It's so inauthentic for me to ask you how you're doing when we've had a conversation for the last 50 minutes.
And you're doing good now because the technical issues have sorted themselves out.
That was good. Yeah, we've had a couple of tech issues, but it's actually been really nice, really nice. I actually want to pick up where we left off, mate. We're talking about savings. We're talking about the way life is today versus, back in the day, so to speak, and
Yeah.
kind of people's behavior. Let's just get straight into it.
Yeah, cool.
Awesome. So we'll get back into who is Dan and the mortgage broker stuff. But while it's hot, strike the iron while it's hot.
Yep.
We were talking about saving today versus saving, 20, 30 years ago, and kind of the different. I reckon it comes down to behaviors. Like, you mentioned that your family and parents, in terms of money, you didn't really have an understanding of what they were doing with money and what it meant to, cook your meals instead of going out for takeaway and all that sort of stuff. It's different today.
Oh man, it is, and that social media, I guess, plays a major part in that, and I guess that's why. I mean, I don't want to speak for the government or anything like that, but I guess that's why they've brought in those bans in terms of, for the younger kids, because it gives them an unrealistic expectation of what life's going to be like. Life's not all private jets and
Mm.
parties and all that sort of stuff. You need to go to work. People need to go to work, and it's not always going to be glamorous, and sometimes you're going to end up doing jobs that you might not like doing. It's not all going to be handed to you, and sometimes, you're not going to be able to afford the nice new flash car. Sometimes you've got to settle for the Toyota Camry that has a tissue
Mm.
box on the back parcel and comes free with a cardigan or something like that.
Mm.
And I can say that because I drive a Toyota Camry. It's 20 years old. It's all right. Um,
Toyotas are great, mate.
mate, this thing's not going to die. It's great. Um, but the expectations I think over time have changed, and people see, as I said, what gets posted on social media, and they have different expectations of what the reality of life actually I think really is, and so their
Mm.
savings, they think they can go out and as I said, buy that flash car or spend that. If the bank's going to lend them 1.5 mil, well, I should be
Yeah.
spending 1.5 mil. Well, hang on a second. Maybe you need to consider whether A, that's what you need, and B, whether that's what
Mm.
what you can afford. Just because the bank says you can, it might not be the smartest decision. Maybe it is, but maybe it's not.
You touched on something really important. I've got a mate I used to work with in corporate, and he bought like a pretty expensive area, Elsonwick, St Kilda area, and it was top of the market. Everything was highly priced over COVID times, but the bank gave him a threshold of what he can borrow, but he's pretty smart. He purposely bought, something like 20% less than what his borrowing capacity was. And the reason was interest rates were low, and he thought, well, if interest rates climb, I'm not going to be able to afford this loan. And so he did his own due diligence, took the responsibility into his own hands. Sure enough, interest rates shot up, and he's okay.
Mm, mm. You've Banks build a little bit of a buffer into their calculations, and they go, okay, well, just because you can, so their calculation builds a little bit of a buffer in, I think about 3%, but that doesn't mean you're then going necessarily to be comfortable. That's like the bare bones living at that point in
Yeah.
time. You've got to be comfortable with the decision yourself and decide about how you want to be living and what's important to you. And maybe that extra 20%, which buys you that bigger house, which then requires more gardening, more cleaning, more cost for upkeep, maybe that's not the smart decision. Hey, maybe your capital growth in that extra 20%, or that you're going to get off that extra 20% is going to make it worth it in the long run. Maybe I'm not going to be around to see it in the long run. I don't know. You got to be happy with what you're doing now, and you got to make smart decisions, I think, now.
Oh, 100%. 100%. And it always kind of, it's so funny to talk about it because it always kind of got me where interest rates drop and therefore you can borrow this much. And I always thought and it seemed to me when I was, buying houses to be rather significant. Your borrowing capacity changes as interest rates change. And I always thought, how is it that I can all of a sudden service this debt better? I mean, I understand interest rates, lower repayments, but it just felt like there was some kind of element to me that went, it seems a little bit like I'm not like going, oh, it's irresponsible, but it just felt like, how is it 1 + 1 = 2? How is it that simple that interest rates drop and your serviceability is now this much? You know what I mean?
Look, I guess it's from the mortgage broker point of view, like for a real answer to the question, the banks have a calculation and they go, all right, no worries at all. If you're earning X dollars and it costs, and you're a family of two and, 2 adults, 2 kids, it costs this much. So if your living expenses are down here, they're going to use the higher number that they say it costs you this much to live. If your living expenses are up here and above that mark, they're going to use here. All right, so let's call that A. So if you're earning, what did I say? You're earning X minus A, your disposable income at the end of the day is X minus A. Let's call that F. I don't know. So F is the amount of money that you can actually spend to repay your mortgage or on any other loans or any other thing you might have. So if F's not going to change, if F is $3,000 and interest rates go down and your minimum repayment comes down as a result, well, you can actually afford to pay $3,000 as your minimum repayment. Just because if the interest rate come down and the minimum repayment's only on a $500,000 loan is only $2,500, well, you've got an extra $500 here, so you can borrow a little bit more than that 500. Does that make sense in terms of how I've tried to explain it with F's and A's and Y's and random things? That's why it happens. But the ultimate question is, what do I want out of a house? What do I want out of a home that I'm going to live in? And that's, I think, where we steer away from, or where people will go a little bit wrong sometimes. They go, well, what's the bank going to give me? So what can I afford? Like, what can I look at? Because the bank's going to set my price range. Well, what do you want? Yeah. I don't have 7 kids, so I don't need a 10-bedroom house. If I bought a 10-bedroom house, someone's got to clean that. Like I said, like there's a lot of work in that. Why do people, well, I think we sort of go back to what we were saying before. People see other people with it, and they go, oh, well, that's what I must want. No, change the expectations there. What do I need? I need a 2-bedroom, 3-bedroom house or something like that. That's comfortable. I don't need a mansion. And if I don't have that mansion, maybe then I can pay it off sooner and invest other ways. If I can invest other ways, then I can cut down my working time and enjoy life.
Yeah, that is key. Like, that is key. And it's funny. It reminds me of a story. Well, not a story, an instance where I'm going to say, yeah, my brother. He's recently looking for a home loan, and
let's call him Jeff.
He won't mind. And it was pretty special because it was his first time going for a home loan, and it's a really big deal. And what we found was him and his wife were pretty excited about the idea of being able to get into the market, but their capacity to borrow wasn't huge. We wouldn't even say $500,000. So you're probably not looking at a lot of options, but you've got a little bit of options, especially in the area he was. And so he was having a conversation with the broker, and they were looking like they're moving forward. And then all of a sudden, some new properties came on the market, and they were just a little bit more. And then other properties, and they're just a little bit more. And then all of a
Yeah.
sudden, you get this like, what is it? This kind of disease of just you're seeing just a little bit more
Yeah.
and just a little bit more. I fell for it. The property I live in now, there was a couple other properties around that probably 100 or 50 grand less, and emotionally I've gone, well, this one's a bit more expensive, but I can afford it, and it's because I'm justifying the reason to max out my capacity, and
Mate,
and it's just
real
such an
estate
easy
agents are
thing to do.
smart, aren't they? Real estate
Yeah.
agents are smart and they know the tricks. And sorry, excuse me, they know the tricks, and they know. I fell for it as well, mate.
Yeah.
The bloke that showed us the house that we're in is like, oh, we're going to show you a different house. Or sorry, we asked to go and see a different house, and he brought us to the front door of this one. And it's that emotional thing. My wife fell in love with it and made the
Mm.
decision that we're buying this, and then I was consulted on that decision, and consequently led to agreements that yes, we're buying this one, and it was outside the price range that we were after. So it does happen. And
Always
I'm
is,
not
eh?
saying it's not wrong, but it wasn't it wasn't like a 500 to a million jump. And
Yeah.
sometimes I think people get caught in that jump, because the bank says, "Yeah, you can have a million if you want it." I think I yeah, I guess going back to what we were saying before about the wants, and people seeing other people with XYZ, and people wanting just that little bit more, little bit more, little bit, never being satisfied with what they've actually got. Sometimes that can be a
Yeah.
good thing, right? But sometimes when we start talking about home loans and debt to reach those things, probably, maybe sometimes it's not a good thing.
Mm. Oh, 100%. 100%. Yeah, it's an interesting concept. Like the whole psychology that real estates have behind bracketing as well, and just being able to get people into the threshold by lowering the price just this much, like the bracket, I should say. And then
Yeah,
once you're in that bracket, once you're having the conversation around in that bracket, it just creeps and creeps and creeps and creeps and creeps, and it's just so
yeah.
fascinating.
It's mate, if you have a look at the way other countries manage their auctions, they run them completely different. Like the idea of everybody crowding around, and the auction, like in Australia, everyone crowding around the auctioneer just taking bids left, right, and centre, and the emotional attachment and the emotions involved in that can drive the prices through the roof, which I guess is why the agents do it. I mean, they work for the vendor, they don't work for the buyer.
Yeah.
And they're trying to get the best price they can for the vendor. No worries at all. But I think it was a guy from I was having a conversation recently with a guy from the States. And he's saying, and it blew his mind in relation to the way that we do it. It's like people, it was clearly evident that people can get caught in that emotional, uh, it's not even a roller coaster. It's just an emotional rocket where, hey, I'm going to
Yeah.
have this and I don't care what it costs me. And so if you
Yep.
want to bid against me, I'm going to top it. I'm going to top it. I'm going to top it. And that mark that I set myself, emotions in the next, in the last 30 seconds just got the better of me, and I went higher and higher and higher and higher. Yeah, it's a shocking. Well, I'm not going to say it's a shocking way to do it. That's not the right word. But yeah, as I said, have a look at the way that other countries do it, where it's might be a blind auction, and your offer, hey, this is my best offer, and it gets sent across, and the highest best offer wins. Simple as that. You don't get a second bite of the cherry.
Yeah. Yeah. Yeah, it's crazy, eh?